Hi, welcome back. Today I'd like to look at finance and why would you finance with a car dealership. I have Jeff Rackers here. Jeff is the finance director for Joe Mockins Toyota Scion. And Jeff, you have quite an extensive background in this business, don't you?
I've been in the business since 1989, been with the Mockins organization since 1991 and been finance director or in the finance department since 1995.
Jeff, what can a dealership offer in financing that maybe a bank or other financial institution can't?
Dealership, particularly Joe Mockins dealerships, our primary objective is to get the most competitive financing for our customers. If the financing doesn't work for our customers, obviously they're not going to purchase the vehicle. So what our focus is to obtain the best terms possible for the customer, and then from there create a comprehensive finance plan that once again will work for them. Why does a dealership have a bigger advantage than a bank? A bank solely looks at collateral and the person's credit, to where they might be focused on one type of person and go have a certain level of loan ability on each vehicle, where we're able to shop different banks that cater to different credit profiles and different advances on the vehicles. At Joe Mockins, because we command such a large amount of banks' attention, because of the amount and volume that we do, we're able to obtain finance terms that aren't found under normal conditions at banks. We also bring in nationwide banks, credit unions. We incorporate local banks. So we're widespread, and our curriculum of lending institution is much bigger than one institution.
We have online credit applications through our website. Does that make your life a little bit easier if you have the online credit app to start with?
Well, what we can do with an online credit application is we can take it and process it so that we know what the customer is going to qualify. Now, the customer needs to pick a vehicle out, and once we get all the certain aspects of the loan package put together, at that point we can finite the deal a little bit better for the customer. But at least it gives us an area in which we know where to shop and what to look for the customer.
Jeff, I know in the mortgage business for many years, 30 years was the standard. I'm thinking 60 months for years was the standard in the car business, but really there's no standard length of loan anymore, is there?
No, well, 84 months is about the maximum of what we're seeing our lending institutions do. It's not a common term. 60 and 72 are much more common now in the industry than what they used to be. It used to be 36, 48, and then 60 was the exception. But we also have the ability to lease a vehicle too if you want to do a short-term financing program on a vehicle. So there's different terms, and different rates do apply to those terms, but we can stretch it out to make the payment more affordable.
And Jeff, I guess kind of the last thing, money down always helps, doesn't it?
Well, when a customer has a cash investment in trying to obtain a vehicle, it does get the attention of the bank a little bit more. Cash down is always going to help secure the loan. It doesn't necessarily mean that you'll get a loan with cash down, but it's going to increase the percentage of that possibility happening.
That's Jeff Rackers. He's the Director of Finance at Joe Mockins Toyota. I hope we've answered some of your questions. Jeff is always available if you come here and purchase a car, and he has a staff of a couple of other people as well. Thank you very much for stopping by.